Yo, what's up Banter fam? Welcome to yet another masterclass. In this series, I'm going to be teaching you my tools, my strategies, and my secrets on how I manage to do it in a short period of time. First thing I need you to do, I need you to hit that like button. Then I need you to hit that subscribe button. And if you are opening any new accounts, make sure to use the links below in the description, as that will qualify you for any giveaways, any specials, and it will show love and support for the channel. In this class, I'm going to be speaking to you about a special tool called the Fibonacci tool. This is a number sequence that has been used in all creation, from seashells on the sea to petals on a flower, and as well as trading charts. I'm going to be showing you what it is, how it works, and how powerful these can actually be added to your strategy. This show is sponsored by BYBIT. Let's get into it. So Banter fam, what is Fibonacci? Guys, this is a number sequence that was developed way back in the 200 BC. It was then further developed in the 1200s, and it exists in our entire world right now, even our trading charts. Guys, this gives us levels of where we can retrace to in the market, as well as where we can also extend in the market. And it gives you a nice little structure on where you should be setting buy or sell orders. It helps you predict specific levels, and it gives you a nice tool to back it as well. Now, Fibonacci only really works very well in a trending market. So the market needs to be in a bullish trend. We need to be having momentum to the upward side, very more volatile markets, as well as a trending down market. It does not work well in a sideways market at all. We need a nice shifting flow in the actual charts. Now, why is it important to be using this? Because what it basically does for us, guys, is it gives us key levels on where we want to be setting buy orders, as well as take profit points. And it helps you predict on certain areas that we could actually be bouncing and where we could start actually getting a lot of reactions. Now, this is also a very common strategy. So when there's a whole bunch of traders, and a lot of people around the world using the same sort of strategy, same sort of bounce zones, we usually start to get the reactions on the chart at those specific levels. Now, how do we use them? So let's jump onto the charts, and let me first show you on how we set it up. Now, this is not an indicator, it is a tool that we use. So you need to jump to your toolbar, and you can see this third row over here. If you click on and you scroll down, mine's at the top, there we go. So if we have a look at the top, yours might be a bit further down, you'll see the Fib Retracement Tool. This is the tool we're going to be using, okay? And if you select that, you can see how it draws all of these funny lines when you put it up or down. Now, the first thing I want you to do, I want you to click it and I want you to set it out. I then want you to go to the settings of that. And yours will probably come in a whole different range of colors. I like to simplify it. The colors sort of confused me a bit. It had many different colors. And when you come into this style in the settings, you'll see all the different numbers over here. And the numbers that I have here, I want to make sure that you have the same one selected. So you can see there are many more that you can add, but these are the basic key ones that you want to be having. So make sure you got the 0, the 382, the 0618, all of these over here. And when you've selected them, you can also select the color that you want the line to actually be. And you can see with me, I've set all of them at a more or less neutral color, so it's not too confusing. Make sure you got the 1618, make sure you got the 0618, as these are very important ones to have. Once you got that, you're then going to select it, and then your settings will stay and they'll be saved. Now, what's important with this now is you need to understand how to use the tool. So we can see very clearly that the market trends, right? Now, it's very simple for me. If the market is trending to the upward side, I've now learned that I don't want to chase into pumps, right? I don't want to chase, I missed the buy. We've already had the bulls now take control. I want to know when this turns and it comes back, where can I expect it to bounce? Where is the main level to bounce? Now, this is where the tool helps very much. Now, if we are trending upwards, as I just said now, and we're starting to make our way up, and now the RSLs are getting high, and we can start to see, we're breaking trend, we're starting to lose some sort of steam to the downward side. The tool is set where you need to take the low of that wave to the top of that wave. So if you want to be looking at where can the pullback come, where can I be adding sort of positions, you want to always move the fib tool in the same direction that the chart is moving or the price action is actually moving. So what I mean by that is if we were trending up, I want to see how far we can come back down. I want to take the bottom of that wave. I want to take this fib up to the top, and I then want to select it and to hold it like that. And then we got the very simple rule where a 0.618 is a golden zone. It's a very common zone. I can't tell you why, but it's a very common zone that gets hit very often, and it's a very big strategy or a very big level that a lot of traders do know. So we like to call it the golden rule, and it gives me a nice area that when we've had a strong push and we can confirm off of moving averages, off of RSIs that we are in a trending market and you want to be getting in on some pullbacks, what I like to do then is when I like to put the fib up, look where we are, and I want to be patient for the price to come down to these sort of levels. Then I'll look at RSIs, I'll look at trends, but I know when we get to these key zones, the golden zone, we can definitely get a nice reaction in the market. Now, let me show you, for example, on what we mean by this. Now, if we take this whole move, and this is me using Bitcoin as an example, from the early 2020, all the way through 2021, do you see this long wave to the upward side? Now, if I came into the market and we were, and I'm looking at this area over here, we've just come a very far away. So I don't want to be buying at the sort of top. I rather want to wait for the pullback, right? So what do? You take that fib tool right from the bottom. You want to take it from the bottom all the way to the top of the actual wave. And do you see now what you've done is you could already see we're losing some sort of steam. You didn't FOMO in. You are waiting patiently for the golden zone. And if you see the golden zone over here, do you see this 0.618 zone over there? We went straight back from there. We went all the way down to the golden zone. We bounced, and then we started to the upwards trend, and we started moving to the upward sort of side. So you can see how accurate this actually tool is, and that's how simple you actually want to keep it. Doesn't matter what time frame you're using or what wave you are using. If it's a long impulse wave to the upward side, once we start breaking trend, we start slowing down, RSI start to turn to the top, and we're looking to retrace, you can then drag your tool from the bottom to the top, and you want to always be looking at the golden zone, the 0.618 level. And that's a very basic, accurate strategy that does work really well. Now, that's catching retracements. Then what you have is, if you have a downwards market, okay, meaning we are now starting to trend down, where you want to see, okay, market started to really fall down quick. And now I'm in the market, but I never want to sell on a big dump off. I rather want to look at some sort of point. Let us rather get a bounce in the market. Let me rather then free up a little bit of cash at this sort of zone in case we then have another wave. So what the rule is, just going back before I jump here, is if we do hold the golden zone, so if we do hold the 0.618, it usually means we're going to continue the momentum. It usually means it's a healthy retracement. Now, that's the same thing if we're moving down. So if we're moving down, now I'm going to use the tool in the other direction. Remember, you always want to use the tool in the direction that we are moving. So if I take it from there now, I want to take it down to the bottom. And you see how we got the 0.618 line over here. So that means if we are trending downwards and we bounce at some point and we make our way up to the 0.618, that's a common retracement, which means we can still get rejected here and we can still continue the downwards move. So what that means for me is if I'm in the market and I didn't manage to get out, and now all of a sudden we start to make our way up to these sort of levels over here, I want to either look to get out or to short the market. If we lose steam here and we start getting rejected, it could definitely mean we could have another leg to the downward side. And that's giving an indication to either stock up, or start laddering out of the market and start either taking profits or slowly reducing your actual position. So it gives you an indication on either way you are trending, and it gives you a nice reversal indicator as well. So what I mean by that is if we're trailing upwards and we break the golden zone, it's very much to say, okay, it's a possible reversal. We might not bounce and might not recover. And it's the same thing if we're moving down. If we're moving downwards and we get that and we break the 0.618, it means we might be reversing and we might not continue that actual move and flow. So you basically want to use this to your structures. You want to be using this with your RSIs, with your MAs as well. And at least it gives you a zone on where you can be setting limit orders, buy orders or sell orders, and adding that to your strategy. Now, one little thing that I do want to add, and this is basically teaching you how to extend. Now, what it means by that is when I'm using the fib from a previous wave to the upward side to the down, it's giving me a pullback zone, right? Now, the biggest problem is when coins get into price discovery, because, you know, I just used that tool and I needed previous data to use that tool. Now, what happens if I don't have any more previous data? Meaning now this has now really started to break out into price discovery. This is where I like to use the Fibonacci tool again, but now we're going to be using it in the different sort of direction. This is where the 1618 becomes a really key gold zone for you for some sort of take profit level. So if we have a look over here, if we were trending to the downward side and I was buying in these levels, okay, I bought in break of trend, I bought in on the 0618 extension. I want to take the previous high to the previous low of this, and I want to take that from the top to the bottom, and you can see how it gave me an opposite trend now. It gave me an opposite, it gave me the actual extension of the fib tool. And what the rule is with this is you always want to take the previous wave. We're trending up, right? So the reason why I took it from top to bottom here is because I want to see the lines to the upward side. If I take it from the bottom to the top, I'm going to see them at the downward side. I want to see them on the upward side. And then we get this very key levels here, which is always the 618, but it's the 1618, the 2618, and the 3618. And what this does for me is this is predicting that if we have a breakout of all-time high and we don't have any previous data, these are possible levels we can get to, and these are possible levels we can get rejected from. So what that does for me is it allows me 3 different levels that I can set some sort of take profit orders or some sort of laddering out strategy. Not to say that I can't go a bit more, but at least it's giving me key zones, and you'll be very shocked how accurate this can actually be at times. And what it will do for me is to say, I've entered in over here. We are riding along the journey. I want to take some profits at 1618. I want to take some at 2618 and at 3618 as well. And basically now it's also giving me some sort of take profit strategy. So remember, what we're looking at is when we're retracing, it's for your buys. Now when you're in the market, you want to see, I'm in the market now, what are the levels that we can get to? And then what it does for you, it gives you the extension. You're able to then look at any TP points or any points you want to be banking some sort of profits. So all that it is keeping it simple. And then what it does for me is if I am looking at a Bitcoin pullback, so what I'm doing here quickly, there we go, is if I'm looking at this trend up now, I want to be adding some of my Bitcoin. I know the 618 is sitting at 44,000. Now it's easy for me to jump to my exchange, jump in here. Why must I buy now if I know we can pull back more to the 44? And the amount of times that it actually does, it really blows your mind on how accurate these lines are. But I would rather wait for the 43 zone. So instead of me buying now at 48, I can rather wait for 43,000. I can set it in as a limit order, and I can be patient. And if we break any trends after that, I can then look to change my sort of strategy. But at least it teaches you patience, and it teaches you on how to buy the pullbacks. So let's have a quick recap from the show. Remember, what is Fibonacci? Guys, very old number sequence that has always been accurate even on your trading charts. Remember why we use them. They help you with limit orders. They help you, where should I be buying? You know, should I be waiting for this pullback? And then it actually gives you levels. So we all know the market's going to pull back, but where can it pull back to? This gives you levels. I should take profits. When do I take profits? Go look at your levels. Do you see how it gives you a little bit of structure? And remember, how do we use it? Always refer back to the video, and remember, you always have these videos to fall back on. So if you're ever stuck, practice always makes perfect. Fall back on them and keep learning. You'll see, you'll quickly catch on. I will see you all in the next video.